So today, basically, almost every month, we do a session checking out what's going on in the blockchain world. It keeps on changing. Regulation, I mean, just looking at the last time we spoke about this space and until today, you had China give issues to, and I'm not even talking about Musk, that of course, every second week depends on his mood, he's manipulating basically assets. But I think other things with regulation and China that decided that nobody can mine anything there and gives more trouble to this space. Things keep on changing every second, which is why we're here every other month to really check what's going on in a fascinating industry in the world of cryptocurrencies that some argue that is worthless and others argue that is the next thing that is worth a fortune, and obviously made so many people very, very wealthy recently. And we have exciting speakers today, and I'm looking forward for my keynote speaker, Mayor Suarez, that is a good friend of ours, and we'll talk with him about the fact that he lets citizens, residents pay now in cryptocurrency, and I think he's basically stealing the show. And really, while New York City and LA and other cities on a red carpet send people his way anyway, I think he takes it to the next level by being such an innovative mayor. So I'm very happy to be here today. I basically like to say that we are very unique. This is the only blockchain conference that doesn't have Tim Draper as a keynote. And we will start with speaking to Mr. Samuel Kalt, who's the co-founder of Statistics Capital, and Valentine Matter, the other co-founder. We're going to talk about high-frequency trading in the cryptocurrency markets. Hey, where are you calling from?
Hey, hello. Thanks for having us. We're in Panama right now.
Panama. I was just listening to Van Halen's Panama yesterday. So I'll let you guys take it from here, and would love to hear your thoughts and insights.
Okay, thanks. Yeah, let me just share my presentation here.
I would just say you're an investment management company, and you're going to talk about high-frequency trading. Go ahead.
That's right. Yeah, let's start by a quick disclaimer, and then we'll start with the team. So I'm Sam. I have a background in high-frequency trading. I used to work for Transmarket Group, which is a prop shop based out of Chicago. There I was focusing on fixed income derivatives, the European markets to be precise. And we were doing market neutral strategies such as relative value and market making. Then I moved to London, where I worked for another prop shop and where I built a Canadian fixed income derivatives trading desk from the ground up, which ended up accounting for about 10% of the market volume there. And those strategies were as well focused on market neutral liquidity provision and relative value. Val, do you want to go?
Yeah, I'm Val. I'm a software engineer. Before Statistica, I used to work for Monzo, who is a neobank active in the UK with roughly 5 million customers now, I think. So I was working there in their financial crime team, so working on real-time fraud detection systems and that kind of things.
Yeah, so we know each other from back in high school in Switzerland, back in the days. We met again in London about 2 years ago, and we started working almost right away on crypto trading strategies, focusing again on market neutral cross-exchange arbitrage. It's been going really well, so we started trading with our own capital. Then in last October, we started taking on external money, and now we're at about 20 million of assets under management. And we're looking to grow that further, which is why we're launching a fund. So you might ask yourself, why is there still so much opportunity for arbitrage in the crypto markets? There's two main reasons for that. One is that it's still relatively small. So the trading volume in crypto accounts for only 0.8% of the total trading volume in the Forex markets. So it's comparable, the entirety of crypto is comparable to something like the Swiss franc or the Russian ruble, so still fairly small. And the other reason is that it's very fragmented. There's over 200 exchanges out there where you can trade crypto, and there's over 5,000 different currencies. So there's always going to be some amount of arbitrage to be done. Let's go over a simple example of the kind of trading we do. So in this case, we have two futures contracts. Both are on the BTC to USD price. One is on a European exchange, which you can see in red here, and one is on an Asian exchange, which you can see in blue. Most of the time, prices are kind of similar and markets are somewhat efficient, but then sometimes a price difference emerges, like here, where the Asian exchange trades at 10,000 while the European exchange trades at 10,020. This could happen because a big buyer comes in on the European exchange and drives the price up, or a big seller comes in on the Asian exchange and drives the price down, or a combination of both of those. So in a situation like that, what we try to do is to buy the cheap future. So here on the Asian exchange at 10,000 and simultaneously or almost simultaneously sell the European future, which is at 10,020. Once we have that in place, we're market neutral again. So we don't have any exposure to the price of crypto. We wait for those prices to converge again, which could take from a few seconds to a few hours, depending on the market conditions. So here it happens when both prices are at 10,015. And at that time, we try to get out of all of our positions. So we buy back what we sold at 10,020 at 10,015, making a profit of 5 because we buy back 5 cheaper. And we sell what we bought at 10,000 at 10,015, making a profit of 15. So that's a total profit of 20, and we're completely flat again. We don't have any positions. And so we do that 24/7 in a fully automated fashion across several cryptocurrencies, several future contracts, and multiple exchanges.
We focus a lot on our risks and how to mitigate them. So I'll go through a few examples. So we have a few built-in risk features in our trading engine. So for instance, exchanges are a bit less stable than in traditional finance. Sometimes they get a bit slow, like we have a bit more latency, or sometimes they even go down for a few minutes. In those cases, like we detect that and stop trading to be on the safe side. Then we have some internal controls. So we use a third-party company called Copper that's based in the UK, and that provide walled gardens that allow us to move capital across exchanges, but the capital cannot leave that ecosystem. We apply IT best practices. So on the security side, for instance, we use a well-known password manager and two-factor authentication wherever possible. We do code reviews so that we have a 4i check before deploying new code. We test extensively using unit tests, and we have test and staging environments, which are exactly the same as production environments. So we trade with real money, but just smaller size, so that if we have a bug, it doesn't cause big losses. And we have, on top of that, we have 24/7 monitoring, so that if anything is not right, we just get alerted and we can do something about it.
Performance-wise, it's been a great first year for us. Our analyzed P&L is just shy of 200%, with a very small volatility of 6.3%, which gives you a Sharpe of 31.7, and it's the kind of Sharpe you really can only achieve with the type of high frequency trading and high turnover strategies that we deploy. Our max drawdown was 0.81%, and we've been profitable more than 90% of our days so far. And looking at the histograms of the returns at the bottom, you can kind of see that losses are fairly rare, and that a typical day for us is a small profit. And the way we achieve that is we only try to make maybe a couple basis points per trade, but since we have such a high turnover, our volumes are so high and we trade so much, the probability that over a certain day we end up making money is really high.
Yeah, and so far we've been working with managed accounts only, but we're launching Statistica Fund. So we partnered with industry leaders to do that. So as I mentioned before, we use Copper for the walled garden setup of the custody/prime brokerage part. We use NAV Consulting as fund administrator, who are specialized in crypto funds, Harneys for the legal stuff, and Richie May as our auditor. And yeah, so the fund will have no management fee, 30% performance fee, with a minimum investment of 100K. We think our strategies can scale up to 100 million while still generating 100% of returns. Thank you for your attention, and feel free to reach out at info@statistica.capital.
Thank you. We still have a couple of minutes to discuss. I wanted to ask you maybe how do you see the volatility in the markets recently? The market went to crazy highs in May, went down now. Still, you know, folks like Tesla guy, Musk, and right, can change or even manipulate some trends. How do you see from, I mean, you live and breathe that space. That's one question. And maybe the second question I wanted to ask you is that we felt that the market matured now because, you know, back in 2018, you know, you had all the mass market mainly involved. Now, I think in the last couple of years, you saw more institutional entities getting into the trading and everything. So I wanted to ask you how, you know, from your perspective, how you see that. But before you answer my questions, we have two questions from the audience, which probably is more important than mine. How do you manage the risk of an exchange getting hacked? That's one. And the other, great presentation, is that fully AI trading?
So it's not AI trading. It's not black box. It's completely deterministic. So we have like a logic, and that, you know, we just use that. So there's no AI involved. It's really purely arbitrage. And then the risk of an exchange getting hacked. So there's a few things you can do. So first of all, we spread our capital across several exchanges so that we don't have too much exposure to just one. We are careful when we select our exchanges as well. We only use the most, you know, well-known, most reputable companies and exchanges. And then there's also Copper offers this thing which is called Clear Loop. Copper is our prime broker, and they offer Clear Loop, where you can, on some exchanges, you can trade on the exchange while your capital sits with the prime broker instead of being on the exchange. So you get rid of the counterparty risk there. So those are kind of the different ways we try to mitigate that counterparty risk. Yeah.
Thank you. And
yeah.
In general, how do you see the markets? Any personal opinion as people that live and breathe this space? How, what do you see it going? Do you think we'll see more capital coming into the market in the next year or two? Would love your personal perspective.
Yeah, I think like a big theme is regulation, right? Like as we've seen with China over and over again. And I think it's going to be a back and forth between, you know, more regulation, so the prices are going to come down a bit, and then, you know, innovation, and the price is going to go up a bit. But I think, yeah, long term, we will definitely see the markets evolve and become more institutional, you know, larger overall as well. And I think medium and long term, we're definitely bullish in the space, even if in our trading we're market neutral, so it doesn't really affect us.
Got it. What's the main driver for the number of arbitrage opportunities? Is there more in a bull or bear market, for example?
Yeah. So volatility. The more volatility and the more volumes we have, the better for us. The more opportunities you get for arbitrage. So this could be volatility to the upside or to the downside. So it's really that. It's really dependent on volume and volatility for us.
Another person asking, why don't you have a hurdle rate before the performance fee?
Yeah, we haven't really used the hurdle rate so far. I guess it's not like we have really a benchmark to which we can compare ourselves because, or I guess with the kind of Sharpe ratio we have, maybe the benchmark should be the risk-free rate, which, you know, in dollars is pretty close to zero anyway. So yeah, that's why we don't have a hurdle rate.
Got it. Well, yeah, I guess this is what we have for you guys, the questions we've had. Anything else you'd like to add at this stage?
No, yeah. If anyone wants to get in contact, we're happy to talk to people. So they can send us an email at info@statistica.capital. I'm sure it's available on the site as well, in the notes. So yeah, we were happy to talk. If you have any questions?
Yeah. First of all, we'll send it to everybody, but you can also write it in the chat now if you'd like. So so people would have it as well. Even though, again, everybody, you have our information. You can always contact us, but we will also send the contact information at our automatic email that will be sent to all of you exactly in 24 hours, as the system does. Thank you guys so much. Stay safe. Enjoy Panama. Some of us are not in Panama, so bear with us. Enjoy the weather. And thank you so much.
Thanks. Yeah.
Thank you.
Have a good one.
Thank you.
So we'll continue, and my next guest is a good friend of mine, Elon Morley. Actually, I feel so convenient to have you, Elon. I feel so, I can just open the buttons and change to a T-shirt and feel good because I know Elon for many, many years, and we will share at some point in one of our sessions the story behind Elon that he never really shares. So first of all, I'm sorry, it's too late. Late now. So just so you know, Elon's father, Ian Morley, one of the most well-known, recognized, and accomplished people in the British financial system. Is that a way to describe him? At least initially. Later on, he did so many other things. He's the chairman. We're very fortunate. He's the chairman of our UK conference. It's been going on, I think, for, I don't know, 6-7 years now. We are very... so that's how it's all started, and Ian is the chairman of the conference. Elon was one of two families that back in the day told me you gotta look at blockchain, and I was very hesitant. I said, family offices, this is weird, you guys do weird stuff, you dress weird also. And then I went to the conferences, he sent me Elon to some conferences, and I came back thinking exactly the same thing, saying to Elon, listen, buddy, I met some of the so-called advisors in your space, or I saw some ICOs, and this is crazy. But thankfully, I listened to Elon, and we did a lot in the blockchain crypto space in London, in Texas, in New York, with the biggest names: Microsoft, HP, Cornell University, loads of names. And anyway, Elon recently, he was an investor in blockchain. That's initially we know each other because he was a family member, a next generation that invested in the space. So I always went to him with questions about topics, sponsors, and he opened his own fund once he understood he was doing pretty well himself. And here we are today. So Elon, you moved from UK to Tel Aviv. How are you?
Well, that was a hell of an introduction, Danny. Thank you.
I don't know if you have time to speak anymore. I think that's it.
Well, yeah, just to get to the point of matter, you're actually a very good person to bounce ideas off when it comes down to this field, because to me, you have the skepticism of the general populace about, initially anyway, about blockchain, about crypto, where it's at. Many a night I've got a message from you telling me that it's all a scam and what are we doing and this is crazy. But markets are cyclical and they're long, and we've matured with them. I think that there's a little bit of PTSD from 2018's market crash or fall. And now, as there's a slight correction, people are a little bit, if you look at the articles, the way the media sways from sort of bullish to bearish with a capricious, sort of breeze, it's quite interesting to see how, if you think about it, this time last year, Bitcoin was at 9,000. It was sort of oscillating between 9 to 11,000, and now we've got it at like 34,000 USD. So when people say it's crashing, it's over, it's a long-term bear winter, which is what I hear quite often. I always say, look at the macro overview, and also now with all the regulation that was touched upon your previous chat. You ever heard of the term FUD? Danny, have you heard of this? It's quite popular in the sort of crypto blockchain world. It stands for fear, uncertainty, and doubt. And it tends to be quite prevalent narrative in this market space.
That reminds me of what I had in mind when I got married, but that's something different.
Oh my goodness.
I'm kidding.
I hope Linda's not watching. But that aside, one of the reasons you wanted to talk to me was because of Bitcoin volatility. And sort of my view of it at the moment, having been a big Bitcoin investor, I run a Bitcoin volatility fund as well, as you know, is that it's only eventually going to go up. Even regulations, the ETF is on its way. Even it's been sort of hinted at by the SEC. It may be delayed again because it takes a long time to process things. even with all the regulation upcoming, the ransomware, the environmental criticisms, the China sort of banning, all these things in some respects are actually going to lead to a maturation process well needed. So it's passing the Lindy test as well.
And what do you think we're going to see with regulation? China is giving trouble. Well, China is not a good example because they always give trouble for many other things like liberty and stuff like that. But UK gave some trouble to Binance there. And I don't know, how do you see regulation improving, or, you know?
Well, regulation is run by, you know, people who take a long time and need to gather their facts. Sometimes they're absolutely right. You know, the way that they got rid of the payday loans and whatnot, and some of the other schemes that the banks have actually initiated. Sometimes they're a force of good. And in some contexts, they are here. Now, the whole situation Binance is a little bit different. The bank regulations are to do with the fact that there's a lot of money laundering, there's a lot of issues that need to be cleared up. They're mainly the provenance of privacy tokens, which people use for ransomware, which is at the moment quite at the forefront of the news cycle. But basically, the regulation will eventually protect investors and will set up a quasi financial institution next to the regulated normal one, and eventually they'll be seamless. You know, lest we forget that in the 90s, hedge funds were considered very much analogous to crypto today in many ways. So I think regulation will get involved. They will kill the party a little bit, but ultimately probably for the best in a longer term, because institutions will feel more comfortable, the risk level will drop, and it will be less aligned with some of the shadier practices that it's previously been known with, mostly unjustifiably.
Now you see, again, looking from the outside in, you see things like what goes on with Musk. And I'm thinking to myself, from the old school I'm coming from, you know, you always like to see me as old school, right? That I have a lot of skepticism about many things regarding what's going on here. In the old school I studied in, many would call that manipulation of assets some way. Maybe it doesn't mean, I don't know what he holds, what he doesn't hold. But don't you think you have a problem when you have a market where every stupid remark influences the market like that by some people? Now, it could be that Musk doesn't have the right positions because sometimes he likes it, sometimes he doesn't like it. Depends on which day. But some people that maybe are less known but have a big following, there's this big thing about blockchain of, you know, that I felt like cult-like, that they are followers, that they are influential, you know, they have a name, influencers, things that I never knew before I went to blockchain. Isn't that dangerous? I mean, the authorities can come in 10 years and say, hey, remember when you said that 10 years ago? You're going to jail, buddy. I mean, how does that look like? This whole thing that A, the market can be influenced like that, which I think is an issue, and B, what's going on really?
This is exactly the conversations we have in private. So thank you for sharing. Well, Musk is Musk. You know, he did that he got his comeuppance with some of the stuff he did with Tesla. But with a cryptocurrency, there's no such issue. So he makes a tweet, he makes a comment, and all that happens is a shakeout of retail. Nothing more than that. It's a blip. It's the narrative for clickbait and for value investors, gamblers, swing traders. People are coming in and out. It's not the longevity play here. It's the hype. Pride comes before the fall. And that's exactly what they're doing. They're sort of rinsing and repeating retail investors, but the institutions are wiser. They know better. Some of them are involved. Some of them are sitting by the sideline waiting for an entry point. Some of them may never enter. It doesn't really matter. The market is here to stay for the long term. Bumps along the way. Musk is Musk. He's having fun because he's infant terrible.
But you know what? This brings me to another question. So I understand when he affects Dogecoin and stuff like that, because serious institutionals will not go there. So the retail is a big part of the pie. But when you look at Bitcoin or Ethereum that are also being influenced by Musk, right? When he says something, it does influence the market. It feels to me like still the retail part of the pie is still pretty big. I mean, we talked about the fact that since 2018, we had now way more sophisticated, smart institutional wealth versus what we had back then, which was kind of stupid money or massive. So am I right? I mean, the capital now is more mature and really more institutional and serious money. And two, why still he has so much influence if there's so much institutional wealth that doesn't care about what he has to say?
He doesn't really have that much influence in the bigger scheme of things. He has an influence on the immediate zeitgeist of the retail mindset, who, you know, buy and sell based on his whims. They're being greedy. They're not doing their research. They want to get a quick buck. And, you know, you enter this field and you have to accept that your wins and your losses. So I don't take him, I mean, I think he's a brilliant man and I have no axe personally to grind against him. It's a bit of a shame that the market is so easily shaken. But that's also the nature of a young market. I mean, as the previous presentation, which I thought was very good, by the way, said, you know, it's the comparison to the Russian ruble. It's really in its infancy. It's very nascent. So it's easily shakeable by an influencer like Musk. He's having fun. He's enjoying himself. He doesn't care. And by the way, your question, and one of the reasons that he doesn't care and he does this, and I'm being highly speculative, of course, is I think he has a grudge against Bitcoin maximalists. Bitcoin maximalists, I started off being a Bitcoin maximalist as well when I first got into it. You know, there's the Bitcoins and then there's the shit coins, pardon my French. So very quickly, Bitcoin maximalists tend to be very opaque. They tend to kill the conversation and effectively limit, you know, the imagination of the community. So I think he was railing against them and he was trying to make a point, which he made. And we lost the retail investors, which is cyclical and will always happen going forward.
Elon, thank you very much. I'm very excited to have with us our good friend, Mayor Francis Suarez. So thank you, Elon, from Tel Aviv. I'm going directly to Miami. How are you? It's been a while since we've seen you live at our last conference, which was unfortunately almost 2 years ago. But we're coming back on Art Basel this year, which hopefully we're there. How are you?
I'm doing really well. Thank you so much. And what a great forum where you can go from Israel to Miami in about a second. I'm doing very, very well. You know, obviously from a Bitcoin blockchain perspective, we've had a great, you know, couple of months with the largest Bitcoin conference in the history of the world here in Miami, moved from Los Angeles. And then with the announcement of, you know, several things. One was FTX, which spent $200 million on the naming rights to the arena where the Miami Heat play. You had eToro, which is an Israeli company, creating its US headquarters in Miami, second largest trading platform in the world. And then blockchain.com, another massive company locating in Miami. So we really have, as you know, spent a significant amount of time and energy wanting to brand ourselves as the Bitcoin capital of the world. Now we see other cities taking notice and getting a little jealous. And, you know, we see that they're trying to wrestle with us for that. But, you know, look, as the Bitcoin community and the blockchain community and the crypto community knows, actions speak louder than words. And it's about actions. And what we've done is not just talk about it. You know, we put, you know, Satoshi's white paper on our website. We're the first city in America, second place in the world to do it. Then we passed a resolution to allow our employees to get paid in Bitcoin, allow our residents to pay in Bitcoin, and consider holding it on our balance sheet. And so that was a very bold and progressive move that we put out there to really plant our flag and say, no, we don't want to just talk about being the blockchain capital and Bitcoin capital of the world. We want to be. And I'm now speaking with universities about trying to find a way to create a education platform and specific that will really differentiate us. So I think we have a great opportunity there, and I'm excited about it.
So thank you for that. I mean, first of all, I will say what I said. I don't know if you heard me talking about it, but I think you are one of the most innovative mayors out there. And for those of you who, I wanted to read the bio, but just reading the bio would take us another 20 minutes. But he's the 33rd mayor of the city of Miami and the first Miami-born mayor. Maybe that has to do something with your heart and soul in the city like that. Now, you see, what's going on is that in New York City, where I am, fortunately right now, and LA and others, you're basically they're bringing you great people on a tray, really they're doing all the job for you guys. But you took it to the next level, because not only did you guys were there saying, hey, we got the palm trees, we got the weather, we're cool, it's nice, it's like beautiful weather. We are also very strong. You started with art. You made art a huge thing in Miami to become the capital of art in the United States. And then you showed that you are as innovative and fast thinker, and you get it. You get how these guys think, because you're sophisticated. And I think with technology. So your step, which was obviously covered all around the place, that you are allowing residents to pay in crypto, was unheard of. And I wanted to ask you, how did that happen? Did anybody oppose you? Did you have people sitting next to you and saying, you got to be out of your mind?
Yeah, we did have one person. So the vote was 4-1. We had one no vote of my counsel. And listen, I understand the reasons why he voted no. I mean, this is someone who, is an older person, is concerned about the impact on the dollar. And he should be. I mean, at the end of the day, anyone who really cares about protecting fiat currencies should be worried, should be concerned. And in terms of the Miami moment that we've converted into a movement, I was reading a tweet that somebody put out over the weekend that says every company is a tech company, and then it said at least it should be, otherwise you're in trouble. And that's how I feel about cities. Every city should be a tech city, and if it's not, you're in trouble. And I knew that 10 years ago, and we started 10 years ago methodically trying to build this ecosystem. But as you said correctly, sometimes to get market share, you have to get lucky, right? It's not just about what you do right, it's sometimes what your competitors do wrong. And it's not that I necessarily want to look at it as a competitive landscape, but let's face it, there is one pie, which is the total amount of deal flow that we have in a given year, the total amount of entrepreneurs, the total amount of founders, the total amount of, that's a pie. And when those people are migrating to your city, you have to do everything that you can to continue that migration and to allow it to really mature. And I think that's what we try to do as quickly as possible. We did it, through rolling out the red carpet, not having taxes, not having regulation, and then doing things to support businesses from coming here. I think one of the most powerful things that we did was we just had a different attitude. You know what I mean? I think cities, unfortunately, like the one that you're in and the one that you cited, they took the position that, people who are high net worth people or who are created tech companies, by the way, many of them were poor when they started. Most of them were poor, right? Starting, companies out of their backyard or in their garage, right? And they built big companies that employ thousands, if not tens of thousands of people, high paying jobs. And now all of a sudden they're the enemy. That doesn't make any sense to me. And I think that is a flawed way of looking at the world, which has unfortunately harmed many cities and many countries throughout the history of humanity. And we unfortunately are victims of that in Miami, because many of us came from communist Cuba and were exiled to this country. And so we've seen very, very dramatically firsthand what a perverse ideology that takes away everything from the private sector and gives it to the public sector could do to a country.
And I have to say, you are truly probably the hottest state right now in the U.S., really, with everything you guys have been doing, and not just because of the weather. And I remember when I did my first conference in Miami, who was one of my main speakers was Manny Medina. Now, yeah. And by the way, also Mana, that
Moshe, yeah.
Moshe, yeah. And I think and what Manny tried to do from day one was create this big conference to make Miami a tech hub. And back then, at least when I was in the city, I was like, I don't see it happening yet. But you managed to actually change it. Listen, I had a call a couple of weeks ago, just so people understand that I'm not just being nice because it's just real. I had a call with Bloomberg Capital. Now, Michael Bloomberg, which we know for ages, he's a sophisticated guy. He's, I'm sure, very well to do. He doesn't need another tax break to move a country. He's okay. He moved from LA, and I told him, Miami, when you look at Miami, in the old days, and you look at Seinfeld, you see his parents dressed with, having fun. That's the kind of, more kind of relaxed attitude that you had there, that's not already, they are actually bringing people like you to leave LA and move to Miami. How do they do that? And he said, listen, Danny, I'm tired of the weather. I'm tired of the taxes. I'm tired of how they treat me here. And I came here, and you know what? When I want the seasons, I go on a plane, 2 hours, I'm in New York, I have seasons whenever I want. How did you manage to do that?
Well, we did the opposite of what everybody else was doing. You know what I mean? The biggest mistake that these cities made was they took people like Bloomberg for granted, right? You never take your success for granted. We live in a world that is highly disruptive, and the rate of disruption is increasing exponentially. And so what does that mean? If you're a company and you're on top or you have a big market share, you can be disrupted like this. I mean, ask a taxi cab driver how quickly they can be, their life can be turned upside down. You know what I mean? From one day to the next, you invent a company that allows every single person who has a car to become a taxi cab driver overnight. And if you look at the delta between what the number of taxi cabs that we had in Miami, which was 2,500, to the number of Uber drivers that we had overnight, 14,000. Okay, so you went from having in Miami, you could not get around on taxi. Now with Uber, you get around in a minute. You have somebody going to pick you up. So, you know, technology has the ability to disrupt in that way. And what happens is people have forgotten the lessons of Detroit. You know what I mean? If you have one industry, which is the finance industry, or one industry that's the tech industry, if you mistreat that industry, it's going to go. In the case of the auto industry, it went overseas. You know what I mean? In the case of tech and finance, it can come to Miami and people will leave. They will leave. If you continue to tax them, if you continue to mistreat them, if you continue to ignore social problems like homelessness and crime, you know, people want to feel safe. They don't want to, I mean, if you've been successful in life, the last thing you want to do is be afraid when you're walking in the streets of your city. We have the most, you know, cities are defunding their police. On all the cities that are defunding their police, they're seeing crime skyrocket. You know, we've increased the funding in our police. We have the most officers we've ever had. Last year, we reduced crime by 25%. The year before that, we had the lowest homicide rate since 1954. 1954. You know what I mean? And Miami looked very different 70 years ago. So, you know, it's not a secret formula. It's nothing too complicated, frankly. It's keeping taxes low. It's focusing on quality of life, like you said, our Basel, and focusing on experiences, understanding that we're living in an experiential world where everything is about experiences. People come and they want to live, and they realize that their most precious commodity is time. Most precious commodity is not money anymore, it's time, right? And so nobody wants to give up that precious commodity in a place where they're not happy.
And you guys were always friendly when it came to taxes, but now you actually, I think also in a way, maybe COVID convinced people that they actually don't need to sit in concrete and they can actually go out there. And now when they came to Miami, they said, hey, we actually like it there. And I even remember 3-4 years ago, people were scared that there was too much construction going on in Miami. They said, this is going to fall. This is too much supply. Yeah. But I guess now it's a blessing because everybody and his parents are on the way to get to Miami.
And by the way, we have supply issues still because
really?
Because what's happening now is there's so much demand that, you know, for example, last quarter of last year, we had the most commercial real estate rented in the history of Miami.
Wow.
Okay, everybody's struggling with commercial vacancy rates that are astronomical. You know, New York and Los Angeles, we had the most, you know, rented. And so now we have to continue to build more office buildings, believe it or not. When people are going away from office, we have to actually build more office buildings, and more office buildings that are tailored to tech companies and finance companies in particular. So, you know, I think that's a part of what we have to do.
And how do you catch up with school and education? You need to suddenly have way more folks that want a high level of education. They used to have private schools here now or whatever, or they go to Rye, where I am in Westchester, and they just pay crazy rent to get very high tier school public system. How do you handle all that suddenly?
So we've been working with Avenues, which is a school from New York that just bought a property here. We've been talking to the local schools and helping people get placed. But we're also looking at a city-based initiative that we haven't completely announced yet because we're still working on the details, to use city land to actually build charter schools that will be specifically tech-focused charter schools. And so that's one that we're looking at doing with a charter school company that has a very established track record, so that we would own the school and they would operate it in the way that we want it to be operating.
Beautiful. And now I wanted to ask you another question a little bit. Before that, so once you mentioned that people can actually pay in crypto, did that actually happen? I mean, can people already pay like that? Do people actually pay like that? How did that, or is it too soon to check?
It's too soon yet. We're working through it. So what we're doing is we are actually about to contract with a third party. Whoever it is, we have to do what's called an RFP. And we have to put it out there to bid to see what third party can safely, take the money and transfer it to our employees, and also accept the money and transfer it, because we have to accept it in dollars. So it would be a third party that will actually do the transaction.
Now I wanted to ask you the horrible tragedy in Surfside that obviously is every day in the news, which is horrific. Some of the elements there, I believe, were, still they don't know exactly why. There were many reasons. It wasn't built right, a lot of stuff. But some of it is the humidity, the salt, being close to the sea. So obviously, it might affect how you guys look at condos right now in your territory. So I wanted to know how you got, does that change anything with you guys, or how do you deal with that?
The way I look at it, it reminds me of Hurricane Andrew in 1992. I was, I was 20 years old around that time. Actually, I was 15 years old in 1992. And my dad was the mayor of Miami at the time. And, it came hurricane at 200-mile-an-hour winds, and it basically wiped out Florida City completely, like pancaked it. And we, as a state and as a county, decided to change all our building codes. And people said at the time, look, you're going to make it unaffordable for people to live in these homes. We went away from the wood frame houses, and we ended up building everything on concrete block with impact windows. These are impact windows. This is a building that was built in like the 1940s, and it has impact windows already retrofitted. So every single building and every single structure was built that way. And now we're the most wind resilient city on the planet. Now, what I suspect will happen after this is we're going to look at what happened, how it happened, and we're going to have to change our codes to make sure that something like this never happens again. And it's a terrible tragedy, and it's one that probably will save thousands, if not tens of thousands of lives in the future.
Thank you for this. And maybe just another quick question. So there have been rumors going on regarding you and Nikki Haley and everything around that. You're smiling. I don't know if you know how popular she is. By the way, I'm originally, as you may know, from Israel. And I don't know if you know how popular she is there, but she's like very, very much appreciated. So speculation that you might be joining, considering joining her running in 2024 presidential race. So anything you can share with us here?
Well, I'll tell you this. I think she's incredibly impressive. She has an amazing resume, having been a governor, so that she has that executive experience, and then having been an ambassador, so she has that foreign policy experience. I think those are two very powerful experiences that, it's very hard to construct a resume, right, to run for president, right? Because it's one of those things where there's no experience that can totally prepare you for being the president of the United States of America. But it would be wonderful if the Republicans elected the first woman president. I think it would be interesting. And I think the fact that she has that foreign policy experience and that executive experience also makes her very, very qualified. I think she's wonderful. I mean, I've obviously spent time with her, and it was flattering to be mentioned in that context. And if I'm reelected in November, I'll be president of the U.S. Conference of Mayors beginning in January. So I'm going to be president of all the mayors in the United States. And that's going to be a big job that'll keep me busy for a year and a half. And then we'll see what happens after that. Only God knows.
Mayor Francis Suarez, you are a wonderful person. I think you're the worst nightmare of anyone in New York City as a mayor position. You're doing such a great job that you're practically, they're losing people left and right. But this is beautiful. I am very fortunate to have you open each and every one of our conferences every single year in Miami. We thank you so much for that honor. Keep on doing a good job and keep on bringing the best minds in the world to Miami, like you're doing so far.
Same here, bud. Thank you so much. Have a good one, Danny.
Thank you so much. So, yeah, I got 2 minutes to talk about things that you can talk about in 2 minutes, which is great because I can introduce my next session. I'm in the wrong profession. You know, I should have been a TV host there, and I don't know how I ended up building conferences. But anyway, I have my good friend Diana here. She spoke at one of our sessions before. She will introduce her panel and everybody here. She's very, very well experienced in the blockchain world. We're going to talk about blockchain in healthcare, and maybe you will present your own panel. But I will just say about Diana, just so you know how what kind of impressive history she has. So she's a blockchain expert, entrepreneur, and experienced executive. She worked with both innovative emerging companies and the largest corporations in the world, applying the profession while also supporting underserved markets. Most recently, she partnered with True North Impact that we had a pleasure of talking to, helping the firm reach into the blockchain-based companies. She's active board member of Canvatus and Commit Good, each focused on the underserved. Before that, she was the CEO for Yaka Ecosystem, a global closed-loop payment system in Silicon Valley, built on a foundation of digital identity. At the heart of the ecosystem was the Yaka wallet, a ledger of ledgers, mirroring the user's assets, held by financial institutions and gateways. As global blockchain leader for Accenture, she accelerated G2000 clients' understanding of the opportunities using blockchain and distributed ledgers. She spearheaded the due diligence on Ripple, where Accenture eventually made an investment. She was recognized as Payment Source's most influential woman in payments 2017 for her work in blockchain, and she co-authored many papers on the subject. She worked in India, UK, Canada, US, and Latin America. As an executive, she led the company's transformation to an electronic payment specialist, doubling revenues and tripling stock value. Diana, this is serious stuff. Clients included Visa, Visa Europe, and First Data. Based in Silicon Valley, Diana was featured in DataQuest's October 2007 issue as one of the top IT women in India. She served as mentor for Singularity University in Silicon Valley, guest lecturer at UC Berkeley on blockchain, and sat on the advisory board of the University of Toronto. By the way, you guys, Canada is probably our most exciting market these days. It's growing like crazy for us. We'll be doing events in Vancouver, Montreal, and Toronto live this year. She was so I think she was the president. She got the UOFT's President of Arbitrage Awards. Mrs. Dachi holds a Bachelor of Science degree from the University of Toronto. And after reading your bio, you still have a couple of minutes for your session as well. Impressive. Take it from here. Thank you so much. And let's take it from here.
Thanks, Danny. That's great. And I appreciate that intro. Just as Danny mentioned, the session is about blockchain and its as application to healthcare. And I think this is significant relevance in the market, particularly as we're coming through this pandemic. Before I introduce my two panelists, Suzanne Somerville and Lucas Perez, I just want to give some perspective about blockchain in healthcare. It was valued as a market in 2020 as about $2 billion, and is expected to hit around $3.5 billion by 2026. In the healthcare industry itself, there's many issues that blockchain can address. At the very least, we know of data breaches involving sensitive payment information. According to Breach Barometer, the report, over 40 million patient records were breached in 2020. Cyber attacks spiked by 400% during the pandemic, based on the FBI data. So medical records are just one example of a key use using blockchain. And I say one of the other prevalent use cases which you'll hear more about during the session, is around supply chain in healthcare using blockchain. This is one of those use cases that I personally explored with one of the large pharmas when I was a global lead at Accenture. And this had to do with drug serialization and ensuring expired medicine was being taken off the market completely. So with that, I just want to turn it, I'm going to now introduce to you my two panelists, Suzanne Somerville and Lucas Perez. Suzanne is the CEO of Chronicled, and I got to get to know Chronicled a number of years ago when I was working on a number of projects that are based on commodities and track and tracing commodities. So Suzanne, she's focused on establishing networks powered by blockchain to automate the way companies do business together. She's one of the founders of MediLedger Network, established for the pharmaceutical and life sciences industry, with solutions already available to enable prescription, medicine verification, and automation of revenue management processes. And again, this is one of those key areas that I think is very, very needed in the pharma industry. She brings over 25 years in pharmaceutical, biotech, and supply chain. And Suzanne was recently the Vice President of Supply Chain North America for Genentech. Lucas, is formerly a researcher at the French National Scientific Research Center on healthcare innovations. He is a strategic expert in blockchain technologies dedicated to healthcare. He also co-founded with a medical doctor a consulting company called Health Mind Project in order to change strategically and medically all projects related to healthcare. He is involved in European policies. Luca is also the French representative for the European Institute of Technologies and Innovation. Now, before I turn it over to Suzanne and Lucas, I just wanted to give a quick understanding of what blockchain is and its applicability in healthcare. So for those of you who are not as familiar with this technology, really it's an infrastructure technology, and the way to think about it is that it's a type of database. And you'll hear the term ledger, but really that's what this is. It allows, and what makes this unique and so powerful is that the data, before the data is actually put on blockchain, it has been verified. It is data that has been immutable. It is immutable, meaning that you can't alter it. So once it's there, there's no changing it. It is transparent to all of those that are involved in using it. And the data doesn't sit somewhere centrally. It is sent, it is basically on a decentralized, distributed nodes globally. So the key thing with those attributes, the transparency, the immutability, the decentralization, all of that basically creates an environment that we would call trustless, meaning that you don't have to worry, you don't have to worry about trust in that data. That means we feel that we can share information in a way that can be trusted. You don't have to worry about that. Typically, companies, when they do business together, every company, every institution, all has their own data, and no one trusts the other. In this scenario, you can. So the applicability for use cases in industries, such as in healthcare, is enormous. And you're just going to see more and more of this happening. And I'm really thrilled. I think that if we think about what's happened with the pandemic and just, trying to figure out where all our, whether it's medicines or the PPEs would be significant in terms of helping our communities. So I'm really excited about blockchain, really excited about the prospect of what we can do, and certainly big in the prospect of what we can do in healthcare. So with that, I'd like to turn it over to Suzanne, who's going to talk a lot about with respect to Chronicled and what she's been working on and how that's been impacting the market today, and what she sees for the future with her technology and with blockchain. So with that, Suzanne, if you can share your thoughts.
Thank you so much, Diana, and thanks for the opportunity to be here today. I thought I would take a few minutes and give you a little overview of the work that we're doing with the intention to explain how blockchain is enabling capabilities that weren't possible before. Chronicled is building the MetaLedger network. Our view is this will be an industry network for the life sciences and healthcare industry, like Diana explained, enabling the sharing of data between companies, that everyone's operating off the same data and that data is trusted. Our solutions have been built today and are in production, both in the supply chain space and revenue management. And let me walk you through our supply chain use case as a good example of how this decentralized technology is working. The solution was built to help meet a regulation here in the United States that all drugs returned to wholesalers and resold have to be verified before that takes place. We built a solution that runs decentralized, so it's run by companies themselves or solution providers who are running it on their behalf. And it allows manufacturers to submit information about their products, the item number, and a URL of where to go and check their database, effectively a phone number for that product. Only the licensed manufacturer has the ability to submit that data or change that data. So everyone in the industry knows it can be trusted. No one can fake being a company and enter the network and do that. Now, if you imagine a wholesaler can upload an entire industry phone book where they know that every phone number for every product was implemented by the manufacturer themselves. And then locally, they can scan a barcode in their warehouse. It goes to that lookup directory, knows where to route the message. It routes the message to the manufacturer's database and checks that the data elements on that box of medicine match the data elements that sit in the manufacturer's database. And it can answer back in less than a second. This is super powerful for the security of our drugs. It enables wholesalers and frankly, even hospitals to do this type of verification on boxes of medicine that they have concerns or that could be suspect. But it is operating decentralized and the manufacturers manage and control their own data. So it's a little enterprise example of how blockchain is being used in that space. The other use case we're tackling is revenue management, which has similar attributes. The revenue management in prescription medicines in the United States today is very complex. There's a whole variety of rebates and chargebacks that take place. And frankly, I think it's part of the problem with our healthcare system that I know many of us are trying to tackle and fix. But what we've built is a solution that allows the parties that are involved in a drug transaction, this is again the manufacturer, the wholesaler, and then group purchasing organizations. They're like the Costco of the healthcare industry, where hospitals and pharmacies have joined to get discounted prices. So when the manufacturer sells to the wholesaler, let's say at list price, this could be $100 for a box of medicine, a hospital, let's say Cleveland Clinic, has negotiated a better price, $80. So the wholesaler will sell at $80 to that Cleveland Clinic, and then they will ask the manufacturer for $20 back to make them whole. It's called a chargeback. There are 2.5 million chargebacks that take place every day in the United States, and at a 4% error rate, that represents approximately 100,000 disputes every single day. This happens because the companies are not aligned on the data. They've identified the customer differently, so they don't know that they're talking about the same customer. They may have different pricing. Perhaps the manufacturer has a different expectation of eligibility for that contract price compared to the group purchasing organization. By building a blockchain-based solution that runs decentralized, companies now can access the same shared data that's public, things like the identifiers for hospitals, 340B license numbers, DEA license numbers. We can use that now to use the computing power to ensure that everyone's talking about the same customer. And then the manufacturer can automate the evaluation of eligibility and communicate it directly back to the group purchasing organization and the wholesaler. And all this can take place in real time. Once they are aligned on the data, when a chargeback does take place, we use zero-knowledge proofs, which is a form of cryptography, to store the latest state of the contract on the blockchain, so that when the wholesaler goes to sell that box of medicine, could be 2 weeks, 2 months later, they can check against the blockchain. Am I selling at the right eligibility? Am I selling at the right price? If they do, that chargeback goes through immediately in real time, and they know they're going to get paid. That knowledge and that real-time settlement in today's world can take days or weeks. And that knowledge is very valuable for their working capital, whether they get paid immediately, which we do think is the future state, or simply the knowledge that they will get paid. They can use their accounts receivable to finance or perhaps get better credit ratings. The manufacturer also benefits in this case, because if the pricing or eligibility is not correct, that transaction can stop at the wholesaler's door for them to fix, and manufacturers are no longer bothered with false chargeback claims. This again is just a small example. We believe this is just the beginning. Any multi-party transaction can be fully automated. And maybe one other thing to note, people often note, Diana said it nicely about trustless. You could say, well, does it really matter? We hear often from our manufacturers, when they share information with wholesalers, they want to see that it actually got put into the wholesaler system. And how can they be assured that the wholesaler didn't have a human error as that data was being put in the system? As I described, the fact that you have to check against the blockchain against price and eligibility means that a manufacturer no longer needs to care if the data is correct in the wholesaler system, because the transactions will be stopped before they return if they're not correct. The future, I think, is super exciting. I think blockchain as a component of software stacks for these enterprise systems is going to really transform business. You may have heard this for years, and I think it has taken longer and it's been harder work. But we often talk about the way we've designed the software stack. If you can imagine that blockchain nodes can be for the enterprise what your smartphone was for you personally, this ability to communicate directly peer-to-peer with anyone in the network, as well as applications that will be built on top of these nodes that companies can choose to participate in. Maybe one other aspect I also think is valuable is data and data ownership. Our solutions have been designed that the companies run the software themselves, and the communication is directly peer-to-peer between companies. There's no longer a middleman that sits in between. Chronicled doesn't even have access to these companies' private data. And what that means is it will enable, in healthcare, data marketplaces in the future. Companies can decide to share data, which might be really valuable for clinical trials, or they may choose to buy and sell data directly from other entities in the supply chain, where today that data is purchased through third parties. And companies, frankly, spend tens, if not hundreds of millions of dollars for that data. They'll be able to get the data directly in the network. So this is just the beginning of the work that we're doing. And we're really excited about where this technology can go.
That's great, Suzanne. Thank you for that. You know, as you're talking through, particularly the revenue management side of things, and I know that part of the project that I was looking at a few years back, specifically to address that, you know, the revenue management side, what really struck me, and this is where I think, again, the power of blockchain, where people don't, because you can't see it, but there's so much in terms of the number of hands, the number of stakeholders that are in the mix in order for that drug to go from the manufacturer ultimately to the consumer. And I think that it's, you know, to the benefit of certain parties for this supply chain to be somewhat muddy, so that money, the way money flows, it's kind of to their advantage, I guess is the best way. I was astounded to see how much, you know, when you talked about those chargebacks, if you start to look at the numbers, you know, and yet, you know, as I said, we're coming through this pandemic and people need medication and you know, they need help. And, you know, to be charged rates where they shouldn't be, it's crazy, because that was designed to help I think some of these policies were designed to help those that were less advantaged or disadvantaged, excuse me. So I think, I'm really hopeful, and I love what you guys are doing, because this is something I thought that really, can be cleaned up. And so I'm going to come back to this point in my future on on another point with respect to this. But before I get there, I want to give Lucas a chance to speak. And so I'm going to turn it over now to you, Lucas. And if you can give us an update, some of your, what you've been working on, and, where you see the relevance in the work that you're doing, and, what you hope to see in the future with respect to these initiatives. So Lucas, if you can go ahead, please.
No, so thank you, Diana, for having me today. First of all, I want to thank you for it. So my name is Lucas Perez, and I'm a French entrepreneur in the field of digital health and technologies for autonomy, using by seniors and by transversality disabled people. I'm also an author, and I'm the French representative, as you said, for the European Institute of Innovations and Technologies, which is an independent body from the European Commission. Because the European Commission works on digital health, on innovative healthcare solutions for patients, for clinicians, in all the European territory, for all the states. Today there are more than 28 states, and we want to bring some innovations, some new way to share practice in terms of innovations through blockchains, through artificial intelligence, robotics in surgery, and so on. So today I want to share you some example of what is blockchain through our healthcare system, what is blockchain for patients, what is blockchain for clinicians. And if I can share my screen, I just want to share some information. So, okay. Okay, could you see my screen? Diana, could you?
Yes,
could you see?
yes,
okay.
You're perfect, thank you.
Okay, and you see my PDF?
Yes.
Okay, perfect. So, one of our mantra, one of our quote is more than product, innovation is a service. So it's resume pretty well what is blockchain. So blockchain is not really a solution. Blockchain is a tool, as you said, and as the other speaker said, just before me. So blockchain is a tool. Blockchain is behind some innovations in healthcare. More than product, innovation is a service. Innovation is a type of service. Blockchain is a service, and all the projects, all the periphery of blockchain, it's maybe like Bitcoin. Bitcoin has a value, or Ethereum has a value because they bring some innovations through a token, through platforms, through a type of innovations. And it's important to understand that they have a value because they bring a value. And Bitcoin couldn't be the most important token if it don't have this value. So for the healthcare sector, blockchain is really present, is really relevant. So healthcare is in the top 5 of blockchain applications, according to PwC Global Blockchain Survey. So, of course, healthcare is behind financial services. The fintech sector is also behind industrial products and manufacturing and energy. But the future for healthcare application in terms of blockchain is promising. So, as I said, I'm also a speaker for the European Commission, and recently we made a conference on blockchain focused on the healthcare system. And my interviewee, who is a French entrepreneur, the co-founder of Trustify, brings an interesting solutions. So he brings with his company a drug management to certify, to optimize the process of drug delivering between hospitals, between clinicians, and all the stakeholders in the state, in the area of healthcare. And we debate also about a fake drug, because fake drug is a huge problem around the world, especially in certain geographical area such as Africa. And in the world, the fake drug representing 50% of the drug in circulation. And it's a real problem that blockchain could solve, because blockchain brings some integrity about the data. And if you certify, for example, a box of drug with the right number and the right date of manufacturing, you could struggle against the counterfeit of drug. So another client, another project we lead is this project, the project Prive. Prive is a Swiss company providing an e-health data middleware that is a software enabling to manage in a way to securize and to optimize the data flow. And Prive have a technology enabling their client to have some security and to get some privatization of the data. And their model is totally decentralized and distributed. And what is interesting with Prive is the fact that Prive don't talk about blockchain, they talk about distribution, and they talk about decentralization. And Prive is a big actor, especially in Europe, to provide, to improve the blockchain project in the field of healthcare, and especially in the field of medical research. For example, Prive developed recently a blockchain for audit trial, and it's interesting. It's an interesting initiative because they can provide technical checks for the data integrity. It's a sort of facilitator for medical certification. Blockchain is a facilitator for medical certification or clinical trials, and we talk about clinical trials at this moment through the pandemic, for example, and it's very interesting to certify, to make the data more accurate, and to bring some trust in the medical field of research. And this technology, this blockchain technology, through the medical research, could be reused, for example, for another digital health solutions. And in fact, this is a game changer for the medical research. Blockchain is a game changer for the medical research. And blockchain is also a game changer for the pharmaceutical industry, because today with blockchain, you have the ability to, for example, to get the right drug, regarding the right manufacturer. And for telemedicine, another segment of digital health, you have the ability to talk to the right doctor through a digital platform, for example, with the right degree, to avoid, for example, illegal exercise of medicine. So Prive brings some decentralized solutions, and they don't speak about blockchain, they speak about decentralization. And it's important because for this company, blockchain is not necessarily a selling point, is not necessarily a commercial point. Blockchain is just a tool, just a solution behind the solution. And another project I want to address is an American project called the XL Maybe you know this project, and this project is based on blockchain. And today, with the pandemic, we see all around the world many projects based on blockchain. For example, with the New York state, the state of New York, but we see another initiative, for example, in Germany. In Germany, for example, the same manufacturer, the same editor, which is IBM, because this product, the XL is manufactured by IBM. And in Germany, certain region in Germany use this type of blockchain to certify, to gather some important information, such as temperatures, the date of vaccination, for example, which is very important to access to some place like the cinema, restaurant, and so on. And it's very interesting what we are seeing today with the blockchain, because nobody knows that behind this type of product there is a blockchain, but the blockchain could bring some trust, as you said, Diana. Trust is maybe the most important word behind the healthcare system. And what we think for the future of healthcare through the blockchain, with our pedagogic initiative, interventions, and our mission of expertise. So we hope that everybody, the stakeholders, and also our audience, the general public, understand that blockchain is a tool and not really a solution. So we could imagine, for example, that our conference provides some healthcare educational token to the patient or to the doctor, reusable to pay blockchain-based services in healthcare, or just to build some product. And tokenization through all these projects in terms of healthcare are very important because tokenization is about incentivization for the patient, for the professional, and incentivization is something very important when we talk about blockchain. And I want to conclude with that. Blockchain will not resolve all the problem into our healthcare systems, and we hope our initiative in terms of learning, in terms of consulting, create more cooperation between all the healthcare stakeholders involved in this process. However, our initiative, your initiative, Diana or Susan, will be more efficient if upstream personal health information from the patient, of course, are digitalized. The processes are automated, maybe by smart contracts, and the stakeholder gets some education. Education is an important point to enhance blockchain and the vision of the blockchain. And so, because I'm also a jurist, I just want to share you an experience. This experience is regarding the regulation. So today we have also a paradox between the nature of blockchain and certain law, certain regulations, certain rules all around the world. For example, in US, you have the HIPAA private rule regulation. In Europe, we have the GDPR, the general regulation about data protection. And we are seeing today a sort of paradox between the nature of blockchain and this regulation. For example, you have a new right. This right is the right to be forgotten. So it's a sort of deletion of data. But when you talk about blockchain, you talk about data integrity and the fact that blockchain is unalterable. And you have this sort of paradox. If a user wants to delete his data, he can't remove or delete this data because it's on blockchain. And on another
Lucas,
yes,
I apologize. We have to cut this short.
Okay.
Because our time's running out.
Thank you, Diane. Thank you.
That's okay. There are some questions. What I want to do is in the Q&A, there are some questions, and I think these are largely directed to Suzanne. So the question that came from Kurt Overley was around what specific blockchain are you using?
Yeah, thanks for the question. So our technology, maybe just want to give a quick background. The MetaLedger network is built today as a permissioned network. I understand that there is a lot of public blockchain platforms that are evolving, but for enterprise use today, they're not at a place that has either the capacity or I would say the understanding for corporations to accept. We're working with large companies like Pfizer, Genentech, McKesson. They take pretty extensive IT security reviews. And if you had a fully decentralized solution, we often wonder, like, where would a company even go to do the IT security review? Would there be anyone there? So we built a permission network. However, we've built our blockchain component on Substrate. This is the technology that comes out of Parity, a technology company based out of Germany, and is actually the foundation of the Polkadot network, which is one of the public networks, which we believe actually gives us the opportunity and the optionality in the future that as required, we can connect to public networks and the services that will eventually evolve there, while at the same time ensuring sort of the security that these large corporations are demanding today. Maybe one last thing I didn't mention, when we look ahead at digital currency and the exciting conversation taking place there, we are evaluating how that will impact enterprise. And again, our technology stack is built in a way that it actually will be very easy to connect to future digital currency. And maybe corporations will become their own banks and do business directly with each other. That portion is exciting, but I would say a little bit still down the road.
Yeah, I think, Suzanne, that's a really good point. I think that's what is, I think what the future possibilities, and we're seeing this evolve all, rapidly. So, everybody will have to stay tuned to what happens there. There's another question. So Suzanne's company is chronicled, and I think Gudrun, I'm not sure if I said your name correctly. She's also looking for the wholesaler and how they're charged in using that blockchain. I'm not sure, Suzanne, if you're able to reveal the revenue model on these, but can you give some sort of guidance at a high level?
Yeah, I'm happy to share the general business model. So one of the things I think that has made the work we've done at Chronicled special is we've really played the role of a neutral Switzerland, bringing industry competitors together to define industry level protocols that are neutral, that everyone can participate in. And so our software that we built is run by these companies, and we charge a license fee to each of the participants to use the solution. I will say those license fees can vary because you can have use cases where one party benefits tremendously and another party benefits less. And so we've really gauged the pricing of that software based on the sort of benefit that the participant's getting. So to answer the question, the wholesaler runs the software and they pay an annual license fee to use it.
Perfect. Thanks, Suzanne.
Mm-hmm.
Look, we're coming to the bottom of the hour, and I know that we only have a couple of minutes. So I'm just, before I turn it back to Denny, maybe Suzanne, do you have any last word on, what you think will be the biggest challenges we'll face using blockchain in healthcare that will be upon us? Do you think it's societal will? Do you think it's, regulation? What do you think?
I think Lucas outlined so many really valuable use cases. And what we have found, as much as the technology is exciting, is there's a whole element of what we consider social engineering that's probably half the battle, to get competitors to come together and realize they have much more to benefit by working together on shared protocols and standards than they do by being apart. When we look at healthcare today and all the difficulties and complexities we have, and the amazing opportunity to really improve healthcare for all people in the world, it really will be the social engineering that becomes the difference.
Cool, thank you. And Lucas, the same to you. Do you have any last? Like, you've got 15 seconds. Sorry.
So I got the same thought of Susan. So blockchain is very important. Blockchain is a tool. More than a solution properly. And so I think it's important for the future to incentivize the patient, the clinicians, to enhance the clinical research, to enhance telemedicine services, to enhance the pharmaceutical industry. And if we, for example, tokenize many services that today are not tokenized, we could bring some value to all these services. And my last word will be that education is very important. Even if the general public don't understand what is blockchain, it's not important. It's not important. Blockchain is just a tool, maybe a technical tool. And if the general public don't understand that, it doesn't matter. We have to go ahead and just understand the blockchain as a tool, and it will be my last word.
Thank you, Lucas. Thank you both of you, Suzanne and Lucas, for adding so much to this conversation. Denny, I'm really glad we had the opportunity to give some insight to your attendees, because there's so much that can be spoken about this. Any rate, so thank you.
Thank you so much, everybody. My next speaker is a good friend of ours and a regular at any, I don't dare to do a blockchain conference without calling Mike. He's not only the blockchain's fastest talker, he also knows what he's talking about. I remember Mike was speaking at our last conference at the World Trade Center. He said that he thought Ethereum was too expensive. He said that he thought Bitcoin was a little bit high as well, and Dogecoin. And Mike, I can say that what happened later, I mean, basically a week later, not long time afterwards, everything came down, as you all know, if you've been watching what's going on with Ethereum and Bitcoin. And since this market is so crazy, Mike, senior commodity strategist at Bloomberg Intelligence, is always here almost every month to keep us up to date and give us a little bit of logic to what the hell is going on in this crazy markets, or not so crazy. So, Mike, take it from here. Good to see you.
Hello, Denny. Good to see you, and thank you for that kind introduction. And I appreciate you kind of glossing over the fact that I missed the market had peaked. Now, that's one of my jobs as being an ex-trader. I try to pick bottoms and tops. And the goal I used to learn in a trading desk 30 years ago coming to Wall Street was you want that 70% in between. And my focus is always the big picture, but I didn't really think Bitcoin was going to drop towards 30, but it did. And I fully expect it to recover. And I'm looking forward to sharing my latest outlook, because I just published it today, and I think that's where we're going to go, if that's okay.
Sure. Thanks from here. We'll hear about Ethereum, about Bitcoin, everything, what's going on and what you think is going to happen. Thank you.
Right. Perfect. So I'll start with sharing my screen, and I want to start with something completely different, just as you expected, because you think I'm talking about cryptos. I am, but I want to start here. The U.S. 30-year yield. To me, this is the most significant development that's been happening later. If you do a simple, I'm actually just taking you right to the Bloomberg terminal. You see this is just a year, and it looks like yields went up and then going back down. But there's one simple little function I like to say, okay, how to define that trend? I just click on this thing called max. And there's a trend in 30-year yields. Going back 40 years. This right here is when I got promoted to come to Wall Street, 1993 or so, because I kept calling for yields to go lower, bonds to go higher. And all the people in New York, and mostly as I work for New York, disagreed with me. But here we are. What does that look like to you? That's a trend. 30 years breaking below 2%. To me, that's a significant development, because I want to ask you and your audience, is anybody who's not heard from their financial advisors that you shouldn't be buying bonds because yields are too low? And I know the answer to that question, but I just ask yourself, because that's why I'm bullish bonds. And I think yields are going to continue to go lower, because here's the trend. And I rope that into cryptos because to me, that's the key development in 2H. To think about 2H, and you're really seeing that on screens this morning. It looks like crude oil's peaked, bond yields probably peaked, and if the stock market, it basically has to go up 15% last quarter. It's basically actually the first half of last year. That's actually a very good year. The average annual year is 8% or so. So we do another 15%, that's great. But to me, that's the narrative to look forward to in the second half. And I fully expect Bitcoin and gold to be the best performers in 2H, along with long bonds. And now what I'm saying is, to me, the long bond is indicating to me and to us that there's greater risks toward deflation in the market. And the long bond for me is one to watch, partly because there's only 136 basis points left on the 10-year. German's a negative, Japan's flat, and there's still 200 basis points left in the 30. And this was one of my key indicators last February 2020, when the long bond dropped to lowest yields in history, which is February. It was right before the collapse of the market. So I'm bringing you into my latest outlook, and here's my headline. I think 30,000 in the Bitcoin as support, and long bond 22% will define this year. In crypto assets. And I have three key sections I really focus on. Bitcoin to gold, I expect to shine in 2H. Remember, gold was the worst performing commodity in the first half of this year. And guess what? Today, it's one of the best performers. I think volatility is going to continue to decline, because I think Bitcoin's stuck in a range, most notably probably moving higher. And I see a building foundation for Ethereum. So I can pause there or just move right into my first chart and outlook, if that's okay. I'll do that.
Sure,
so here's,
sure. Thank you. I just put myself on mute so I don't disturb you.
Okay, cool. So I fully expect Bitcoin and gold to rule the second half of 2021 with some long bond companionship. As I showed you in the start, that long bond, if it keeps staying below 2%, it's telling us something. It did last year. And it's, you know, the world's deepest market. And it's always, to me, long bonds to give you some of the best indications for longer term trends. So my first outlook here, first chart shows the long bond in white overlaid with Bitcoin. Bitcoin's hovering around the 30,000 levels, holding that support, which also is right around the 12-month moving average. Nice to see a bull market that's consolidating, ready to break out higher, and yields potentially putting in a bottom like they did 2018. And this is the inverse of the chart, and potentially putting in a bottom again like they did in 2020, and potentially breaking down below 2%. Again, I'm showing you inverse here. So to me, this is just more likely that yields are going to continue lower. I showed you that trend, and Bitcoin is going to continue higher with less competition, like gold. What's the best thing for gold? When it has less competition right now from bond yields. At least historically, and more last few years, that's been the key thing. In the past, it used to be inflation, but to me, the greater risk is deflation. So in a similar note, I want to show you, this is performance of Bitcoin and Ethereum and the Bloomberg Galaxy Crypto Index since the beginning of this year. And at the end of, basically as of last Friday, July 2nd, Bitcoin and the S&P 500 were both up 15% on the year. Now their Bitcoin's up a little bit more, but it's within a rounding error. So I fully expect Bitcoin's to outperform the stock market in the second half. But I do see underpinnings for the broader market. Bloomberg Galaxy Crypto Index ended the year up 80%, and Ethereum up 280%. So I don't see why that should really end. And I fully expect, I see what we've had is basically discounted bull markets, and markets should continue to rally. But there's two key things to point out here is the stock market just too hot and Bitcoin too cold at the start of the second half? So there's fundamentals and technicals. I view the fundamental underpinnings for Bitcoin as quite solid. Declining supply and increasing demand. A lot of that's coming from, we've had a major pushback in price for some major short-term reasons that are very bullish, i.e. pushback from ETFs that's been delayed in the US, just a matter of time. The issue with China and them pushing back on kind of more almost banning Bitcoin, but certainly pushing back on miners, which has created selling. And then the issues with ESG. But so here I just show you a simple technical analysis. Here we look at the S&P 500. It's the most stretched above its 50-week moving average in a decade. Over 15 to 20% for a while, 15%. So just a little mean reversion there is a big issue for the stock market. And then I look at Bitcoin, it's basically right at its 50-week moving average, which is the annual mean. And historically, that's proven to be a pretty good place to, basically it's proven that sellers definitely historically do not do well at those levels. So there's some technicals, just the relative value. And then kind of my second key theme for this month, it's actually the second, the mid-year outlook for basically for 2H is volatility is probably going to decline in Bitcoin. And here's the main reason. It's bumping up to really good support around 30,000, and it has very good resistance around 65,000. So I'm not saying, I think eventually we'll break above that resistance, but not in the short term. And typically Bitcoin volatility goes higher, bids when market breaks out to new high. I mean, it's uncharted territory. So that should be a while, but I see it as a very well supported market. So that giant sucking sound is my headline, maybe volatility leaving Bitcoin. And here's one trend I want to show you. In white, I show you 260-day trend in Bitcoin volatility divided by the S&P 500. Now, when I was at a hedge fund, we measured everything versus the S&P 500. It's the world's benchmark for investment. It's a US benchmark. And so here I'm just measuring the volatility measures. So what you see is a pretty solid foundation for this year. Last year, the volatility in Bitcoin dropped to the lowest ever versus the stock market. Now it's recovering. Now it's happened in the past. If past performance is indicative, when that happened in the past, it was 2016, when it dropped down to about 2.7 relative to the S&P 500. Now we had a massive rally in Bitcoin market cap. So I show Bitcoin market cap around 600, just around $600 billion, probably likely to have over 1 trillion. It has pretty good solid underfittings if volatility is an indication. So this is what I show. And I fully expect that to continue. Another thing is what you're happening is in futures markets. Excuse me. There's been a pretty steep contango in futures. That means when further out prices are at much higher prices, that's been arbed out. Now, some of the reasons arbed out, I think, is because hedge funds and more significant players are getting involved in the space. But it's also indicative of what we should expect as volatility continue to decline, because there's more and more depth pushing prices lower. Not so much pushing, but arbing out some of the volatility. So this is what I show you here. This was the first futures curve versus the third futures curve. It's come back to first future versus the third future. It's come back to basically flat. And that's been the first time in a while. Excuse me. I caught a little bit of a cold this weekend for 4th of July celebrations. But so it's come back to flat. And to me, that's just the arb. That's people pushing the excesses out of the market. We have a pretty significant discount in the Grayscale Bitcoin Trust. I think as more players get involved, those arbs, those extremes will get pushed out. And this is just one example of volatility declining because of more participants pushing out this steep contango in futures curve. And I think it's indicative of what volatility is going to do. More players are going to do. It's going to make Bitcoin more of an adult market. One thing I want to show you, this is a chart I used from the past, and again, it's similar to the first one. This is Bitcoin 260-day volatility divided by gold 260-day volatility. Now here at the beginning, that's when Bitcoin was very much of an infant, and it was running around basically 12 times the volatility of gold. last year, it dipped to 2 times the volatility of gold, only twice. So what is this? This is purely an infant. Now it's a maturing asset class. But when last time it dipped to such a low level was when the Bitcoin to gold ratio, I'm just dividing by Bitcoin by the spot gold, was bumping up against 1. And when volatility bottomed to this all-time low, which we reached again last year, it just went from 1 to 10 versus gold. I fully expect it's going to go from 10 to 100 versus gold, partly because of this indication, because the fundamentals are quite favorable. Now, not bearish gold, but Bitcoin is in that price discovery stage, and this is just indicative of where prices are going with discovery, i.e. this overall trend should continue lower, but in the meantime, we're in the process of bouncing from a much lower level. And in fact, this level here was the lowest ever that Bitcoin volatility ever reached versus gold. Now, I use 260-day volatility because it's an annual measure, and I always want to keep the focus on the bigger picture. Going into Ethereum, Ethereum is number 2 on the crypto space, and it's one of the best performers this year. But I view it as finding very solid footings around $2,000. It's stuck in a range between 2,000 and 4,000 for a while. And one good way to measure Ethereum is versus addresses. Here, you can see the trend is clearly upward. So addresses used, I get to some coin metrics. I take a 30-day average, so it's a bit of a delay. But you can see when addresses used broke above the old high from 2019 and 2020, and this one was Ethereum was around 300. It was indicative of a price rise. So it's also indicative of the rising tide of the use of Ethereum. Ethereum, I look at it as it's the building block for basically the whole crypto space and platform. DeFi, decentralized finance, decentralized exchanges, and fintech, and it's winning the battle versus a lot of its competitors. So I see Ethereum is very fairly priced around 2,000 if you just look at an auto scale basis versus addresses used since 2018, and this has been one of my robust indicators. This indicator kept me very bearish in the market in 2018, most notably in Bitcoin, and then it got me very bullish in 2019 when it started breaking higher. Not so much in Ethereum, but now well, it was Bitcoin back then, and now it's Ethereum. So I see fully a bull market that's just backed up into a discount for Ethereum. One other way, a simplistic way to look at Ethereum is relative to Bitcoin in 2017. Now, this is something I originally got from Raoul Pal, and I'm just showing you here in white. This is a chart of Bitcoin in 2017. Yes, it's very simplistic. It started around 1,000, it peaked around 17,000. We all know what happened. Ethereum started just below 1,000, around 700. This year, it's peaked so far just about 4,000. And if you look at it overlaid with that same chart of Bitcoin in 2012, Ethereum looks at a bit of a discount. I showed you the other charts, so it looks like Ethereum's in fair value. But based on this simplistic way to look at number 2 Ethereum in 2021 or now, it looks at a bit like a discount versus the way Bitcoin traded in 2017. So around 2,000, if it just gets up near 4,000 nail highs and stays there till like October, it's on fine. It's meh. It's just what Bitcoin did. And then of course, it gave us a styled correction, but I see a bull market that's transitioning. And key thing to think about Ethereum is it's going through this improvement proposal, the EIP 1559. Now that's nothing to remember about Ethereum. It's very nascent technology. The proposal is supposed to reduce supply, and which would be significant because that's what I showed you in orange. In orange, that's just Ethereum supply. Now it's harder to measure, but basically it's been increased on an annual pace around 4% a year. Now overlaid with that is Bitcoin supply. Now the key thing about Bitcoin supply is it's by code. It's dropping below 2% this year, 2% of total. And then it's going to continue to decline, certainly as we get to the next halving 2024, by code defined. Ethereum's less defined, but if this new proposal works out as well, remember, it's nascent technology, it's something new and different. If it does work out, Ethereum supply will drop to near zero or potentially below that of Bitcoin. Now, some of that's getting priced in, obviously, but again, it's an if statement, which I guess I'm kind of biased that it will work out because I've been working on it so long. With some pretty solid, smart people, as I keep hearing a lot of smart people in this space, then that's part of the bias of Ethereum, becoming the platform for space. And if it's annual volatility because of the EIP 1559, the new framework, the improvement proposal works, its supply will drop below that of Bitcoin. There's a key thing I want to point out this year. I published earlier, but I just kind of rehashed it initially. Is the pushback from China in Bitcoin? I look at it as very bullish. Short term, it's bearish, but it first of all it alleviates one of those key issues we've had in Bitcoin. I've heard that a lot of the mining concentration hash rate was concentrated in China. Now that's shifting. There's a major shift away from China, obviously, because they have to. Because of that, in the short term, they have to sell. It's very discombobulated. They have to sell, and they have to raise capital to do what they want to do to move. But I view this, the Bitcoin and digitalization of money may mark potentially an end to China, or not an end, but a major peak from this Communist Party that repressed its people for 50 years. In the last 20 or 30 years, finally lifted them back up to nowhere near westernized levels, but that's completely a surveillance state and more of a communist dictatorship. But there's very little way they can keep up with the more open discourse and open free market capitals of the Western world. Is what I see happening in digitalization, and they're finding that out organically, because the digitalization of assets is enhancing dollar dominance, and that's what I show you organically, which is very unique. And I think I like to ask my audience is, do you know of any digital tokens where the trades in the yuan of any size, or the euro, or the yen? No, it's all dollar. And the most widely traded crypto on the planet is an Ethereum token, and it's Tether. And to me, I look at that as indications. Now, yes, it's very controversial, but I'm a strategist. I look at rising volume and rising market cap as indicative of what's happening in the space. And that's what I show you in the chart in white. This is just Tether market cap of Tether. It's running around $63 billion, but clearly look at the trajectory, overlay that with Bitcoin monthly and the Chinese renminbi in reverse to show its relative value. Just, you know, because that's also a manipulated currency. But here is what's happening globally. There is no measure on cryptos of Chinese renminbi traded. No one wants to trade it on this, one of the most freest markets examples I've ever heard and ever seen of free market capitalism on a global scale are these cryptos that we see trading globally. Yes, there's massive speculation, but they're completely free markets. People trade what they wanna, not what they gotta. And the Chinese want you to gotta use their currency, but it's not working. So here's the dollar gaining dominance globally, digitally, and I see this as a key factor that's happening on a world scale that's really making pressure in China and point out some of the major issues with them going forward versus the last 10 years when they just lifted from virtually zero, fractional level of per capita GDP to levels that are more respectable. But also what it's done is it's plunged the Bitcoin hash rate. That's what I show you in white. And typically there's I would say there's not a high correlation between the Bitcoin hash rate, but there's a longer term trend between with the Bitcoin hash rate and the price. Now I show you here is a 10-day average of the hash rate and the weekly chart of Bitcoin. Now it's back to near its 52-week average. It's at good price. The hash rate is plunged to the lowest level since over a year, but I view that as indicative of not so much the weakness of the price of Bitcoin, but just what's happening with this situation in China. And it's a one-off. It's unlikely to last as all the miners migrate, most notably a lot of it to the U.S. So there's free market capitals, and where they don't have to worry about being banned. It's the rule of law. And that's what I've heard a lot from the miners and some of the people in the space is they're going to go wherever they can get cheap energy and not have to worry about disrupting their businesses. So what I want to show you here is, to me, a key thing that Bitcoin helps to alleviate. This is this race to the base. And I find it significant. On the bottom, I show you the U.S. trade-weighted broad dollar. Now, this is for the last 21 years. It's up 6%. It's nothing. Why? Because let's overlay that with, here's the money supply change in Europe. This is in Aqua. It's up over 300%. And the money supply measure, the similar measure in the US is up about the same. It's the race to the base. So, for instance, this morning on Canada TV, I was asked about the value of the dollar versus a trade-weighted broad dollar. I'm like, okay, well, I look at the dollar as basically this, how Churchill described democracy. It's the worst form of government except all the others. And the dollar to me is the same way. It's the worst currency except for all the others. So it's probably going to continue to appreciate in value versus the other currencies, but not versus Bitcoin and gold. I fully expect them to continue to appreciate. And that's what I show you here. I show gold is up 500% since the start of that period. And then look at debt to GDP. Debt to GDP in the US is running 130%. So a key question we ask ourselves, is M2 going to drop? And is debt to GDP going to stop going up? Very simple. We all know the answers to that. They're most likely to continue to accelerate, most notably if the stock market stops going up. And as if that chart I showed you earlier matters, the US 30-year continues to decline because the government can buy them. And this is a chart, it's a subject I touched on earlier, but I would kind of want to make sure I hit hard on, and that is digitalization of money is here, and the dollar is the top dominant currency on the planet. It's not Bitcoin, it's not the yuan, it's nothing else. The dollar is gaining dominance. Global digital currency, a global currency going digital, it's the dollar, and the global digital reserve asset. It used to be digital reserve asset used to be gold. Now it's all becoming digital gold and Bitcoin. To me, that's the trend I show. And here's just the Tether market cap. I show it this time. I didn't show a log, so it's very much convex. The U.S. trade weighted nominal dollar is up 30% since the start of for 10 years, and the Chinese yuan is basically unchanged. And one thing I want to kind of finish on, and that is, to me, is Bitcoin's migration into the mainstream really means institutional portfolios, and that's what I point out. Bitcoin and bonds are tremendous companions. So let's look at the global portfolio of bonds. Anybody who's held bonds, the world's largest asset class next to real estate, and certainly above equities, have the lowest yields in the history of mankind, and negative in most of the world. Let's look at Japan and Germany. So I just did a simple correlation and testing that, point out the yin and yang of bonds versus Bitcoin complements their companionship. So I just created a simple index in the Bloomberg port function where I show the Bloomberg Barclays 20 plus treasury bond index. I use 10% of an allocation to Bitcoin. Now that's kind of high, but I wanted to point out is if you add Bitcoin to that allocation, and at 10% rebalanced quarterly, I go back 5 years here. What I show you here is a volatility of this Bitcoin index that I created, which is 90% bonds, 10% Bitcoin. I went high intentionally to accentuate the volatility. It's actually lower and clearly lower than the NASDAQ. That's why I show you very similar performance going back to 2016. So to me, yes, you can fully expect this rapidly rising asset when you put it in our portfolios and increase performance, but it also reduces volatility. And that to me is the key thing that portfolio managers are picking up on. And that's what I show you here. The volatility of this index I created, which is bonds and Bitcoin together, 10%, is about the same as bonds on a standalone basis. Now, how can that be? Bitcoin's so volatile. It's because of negative correlations. And again, that's 10%. So to me, the world's picking up on this. And every asset manager on the planet that's not allocating to Bitcoin realizes, well, they're greater risk 5-10 years from now, maybe looking like they have their head in the sands and they missed out on this next big thing. Not by just by allocating 1 to 2%, at least say, hey, I have a prudent reason to add it to my portfolio, and I fully expect price. And in worst case, you lose that 1 to 2%, but if you continue, you're fine. You've looked like you've at least done your job to be ahead of the game and be smarter than your average 22-year-old who figured out Bitcoin 5 years ago, because they're young and naive. It sometimes helps. So here's why I point out the companionship. Just pointed out the Bitcoin, close relationship between Bitcoin and bonds, the generic 30-year yield, and the bond market. And I want to end on this chart. It's one of my favorite charts. What problem does Bitcoin solve? And that is what I show you in white is this U.S. money supply since 2017, clearly breaking out higher. So where is that going to end? I look at this, I'm like, what's going to end the U.S. money supply from just continuing to rally rapidly? I don't know. I'd love to see your take on that. And juxtaposed with the money supply increasing is Bitcoin supply declining. Now, I just show the annual rate. It's running around, less than 1% by 2028, about 2% this year for the first time ever, and 2% significant because it's the price for gold. It's basically the annual change in gold supply. With that, I can go back to the beginning, and Denny, see wherever you want to go. I think we have a few minutes left.
Thank you. So you're saying Ethereum you think is discounted, so you think we'll see it at the same level we've seen it by the end of the year, the 4,000 levels?
Oh yeah, I think it's going to continue to rally. Like the key fear about Ethereum is the potential lowering tide from the stock market, because I look at the broad crypto market. It's very similar to Ethereum to the NASDAQ and this rising tide of reflation. Yet Bitcoin's the opposite. In a short term, let's say if we have a short-term correction in the stock market, everything drops. But like gold, it looks better because what happens to bond yields, and Bitcoin will shine. Ethereum, I'm very bullish. I fully expect it's going to continue towards the 4,000 level, which is the first good resistance.
And maybe last question, I asked somebody else today the same question. I think one of the problems of the market is that with all your projections, then comes along a Musk and he wakes up on the wrong, on the wrong day and says something and influences the market. And my question is, how can he influence the market so much? Because it's not only Dogecoin that obviously serious investors don't go to. We thought that the actual market today has more institutional, sophisticated wealth that doesn't care about all that crappy remarks or whatever. Sorry, pardon my French. And yet he still manages to influence this huge market by saying Tesla will buy, Tesla will not buy. Isn't that a danger that the market can be influenced? Where I come from, you might call it stock manipulation, but maybe it's just a game. But still, isn't it more institutional wealth out there? If so, why is it such an effect?
It's noise within a broader trend, and I encourage people to ignore it. I do. Sometimes I'm asked to respond on TV and radio and reports to it, but I focus on the bigger picture, like right here. I show a monthly chart, and I show a Bitcoin ready to break out. What any tweet might do within a day or two, you're not really supposed to care about when you're a long-term investor focused on accumulation. And if some of these tweets, which I think has happened now, provides you a discount in a trend, I think it's better probably to add to the allocation. And if some of these tweets get it too expensive, maybe lighten up a little bit, but that's for the more active person. I view that as let the noise and let the traders beat themselves up, ignore the noise, focus on the big picture. And this is what I show you here. And to me, in the long-term trend is forget the noise, focus on the big picture, which is to me defined with this final chart here. So I view it as just try to keep your hair and look at any type of these dips as from something that's like happened lately when Mr. Musk focused on the energy uses that was very much unfounded. If you look at the ESG benefits of Bitcoin, they're tremendous. I mean, they allow people, allowing people and your average person in most of the unbanked in the world get banked to get access to this digital reserve asset. Look at El Salvador, just getting started. Most of Africa, just getting started. So to me, focus on the big picture and what's happening in the space and ignore the noise.
Mike, maybe last questions I have here from Colonel Abbas Tahouk, a good friend of ours, and it's nice, very much relates to 4th of July. He fought wars and is one of the highest generals in the U.S. Army. He's asking what other promising coins or tokens for the long run investing.
So I like for a long run, I suggest an index like the Bloomberg Galaxy Index will have a survivor bias. Trying to pick out the winners is very difficult right now, like Bitcoin and Ethereum. And the number 3, those are the top 3 in the world. The third and the most widely traded in the planet is Tether. It's a digital dollar. So from a general standpoint, I want to point out the U.S. is crushing China in the Cold War right now, digitalization, by doing nothing, because the world wants dollars. So to me, this is something for the U.S. not to mess up with over-regulation, to embrace the technology. And I think that's what's happening. But as far as which one might be the next winner, I think Bitcoin and Ethereum are a great pair. And then I look at the Bloomberg Galaxy Crypto Index as a good way to measure the market. And at some point, there's plenty of indices out there you can track, and there'll be more and more we can get access to, like the S&P 500. Like trying to pick stocks, I'm not good at that.
Got it. Mike, thank you so much. And I'm looking forward to seeing you in person at our next events after the summer. We have a lot coming. I should actually talk to you about that in New York, in Miami, in Dallas. So we will all look forward to seeing you in person. Thank you so much.
Thanks for having me.